Welcome back. And the one big theme that's played out in markets this week is consumption. And within that pocket, what is going to be the likely impact of the monsoons and the fact that the monsoon is going to be at roughly 90 to 92% of long period average, not looking pretty. And therefore, you might see a slightly weakish consumption trend. Abneesh Roy here, Nuvama Institutional Equities, to try and decode exactly that. Abneesh, great having you. Let me first start off with that. A weak Kharif. What does that bring in traditionally? If you can just break it down subsector wise to try and give us a sense as to what works or what doesn't work, if you have that, or give us your view.
Sure. Hi, good afternoon. Thanks for having me.
Very good afternoon.
So my sense is this is a bit early to get too much worried on because if you see the El Nino impact on the rains will happen mostly in the second half of the monsoon. I think Q1, Q2 results should be strong for most of the FMCG companies, paint companies, Pidilite, etc. So our top buys are Nestle, Marico, Asian Paint, Pidilite, Berger. In terms of business recovery and valuation comfort, we like Colgate, Dabur, HUL. Coming to a specific question, I think we are getting too worried. World is evolving. It is not that 10 years back, the El Nino used to have more impact. What has changed is clearly the kind of subsidies, freebies, which every state government gives. If you see any state going into election, generally we see 2,000, 3,000 rupee being given to each woman. And generally, most of these will be in the rural area. So our sense is we are getting too much worried. Only 30-35% of the FMCG consumption happens in the rural area. Yes, it's a concern, but we'll have to see how true is the forecast, what is the spatial distribution. In Q1, my sense is our top buys like Nestle, Marico, Asian, Pidilite, Berger will all report double-digit sales growth, high single-digit kind of volume growth. And currently, I would say that till the El Nino impact comes, we will mostly have the geopolitical resolution and hopefully crude oil also corrects. Plus price hikes this time will be there. I think clearly for paint companies, Pidilite, it's a double-digit price hike. So a lot of things are there. It is not that there is just a El Nino risk. El Nino risk is there. But my sense is the price hike will be strong. Urban growth is still 2/3 of the FMCG. So that is seeing recovery. So whatever impact of El Nino, that will be mostly in the Q3 end and Q4, not in Q1, Q2. In fact, because of the strong summer, Q1 should be strong for the categories like cola, ice creams, even cooling hair oil, etc. So Varun Beverages, ice cream companies, Imami, these will see strong numbers in Q1. So El Nino is still, I think, more of a Q3 impact because there is a delayed impact of the less rains. Plus, there is a lot of freebies by every state government and central government.
Yes. Hi, good afternoon. In Q4, we saw decent volume growth coming in, but there was also cost pressures which are there. Do you think in Q1 we'll have a price growth also which will come in?
Absolutely. So if you see Q4 across the board, we saw multi-quarter high, multi-year high numbers in terms of sales and volumes across the board. So there is a genuine consumption recovery in Q4. Now, what happens in Q1? The good part is government has been quite gradual in terms of passing on the crude oil inflation, which is a good thing that it's a gradual increase and not a sharp increase till now. FMCG companies, if you see, mostly staples companies have seen 3 to 5% price hike. Paint companies, Pidilite have seen a double-digit kind of a price hike. So they have passed on a large bit of this inflation, cost inflation. My sense is still $90 or $100 crude. Mostly, most of the staples and paint companies are covered for. I think where the risk is higher will be the Alco-Bev companies because in their case, price hike is not automatic. They need to go to the state government for the approval. That's why there the margin pressure will be more. So in the beer companies, spirit companies, the glass inflation will be slightly on the higher side as a cost impact in Q1, Q2. But for FMCG and paint companies, my sense is the EBITDA margins should remain in a healthy band of margins because they will cut advertising, they will cut their other cost. And as I said, most of the price hike required has been taken for a $90, $100 crude oil. So not a major impact on margins at the EBITDA level. Gross margin, my sense is most of the consumer companies will see 100 to 200 bips gross margin compression. But on the EBITDA margin, my sense is it will be limited to 100 bips EBITDA margin compression. But on the sales and volume, the Q4 trend should generally continue in Q1 for most of the companies. And for summer categories, it will accelerate because Q4 was weak because of unseasonal rains in March month. My sense is Q1, Varun Beverages, ice cream companies, Imami, they will see a good quarter in the April, May, June quarter.
Interesting. Abneesh, also curious to know, ITC and some of the cigarette counters still continue to be weighed down. I mean, it's a great business. You've got very strong gross margins, good profitability margins as well on the business. Do you believe that some of these stocks are beaten down not fairly and maybe there could be buying opportunities here?
So it's a good question. We had downgraded ITC from buy the same day when the tax hike came. It was a very, very sharp hike. Absolutely, we have not seen this kind of a tax hike in many, many years. So it was a very, very big impact on the legal cigarette industry. And that's why Q1 numbers will be quite challenging for all cigarette companies. Q4 was also weak, but Q1 will be weaker. So that's why I think there is no tearing hurry to buy cigarette stocks from a near-term perspective. I think investors should wait out Q1 numbers and then start picking up from a 1 year time horizon, because Q1, my sense is legal cigarette industry will see a volume decline in the mid to high single digit volumes YOY. Plus the margin pressure will be there in cigarette business because cigarette companies have not passed on the entire tax hike on the day one of the quarter. It is still happening, and Q2 also some of that hike will happen, which means in Q1 there will be a margin pressure because taxation is higher than the price hike which the cigarette companies have taken. Coming back to ITC, I think FMCG will do quite well in Q1, but agri will again be weak because it's linked to the overall exports business, which is weak because of the Iran crisis. So overall, I would say that please wait out for Q1 and then take a 1 year view. In 1 year, what will happen? The price hikes will be fully passed on. And the good part is next 2 years, I don't expect any big increase in cigarette taxation from here, because this government has been generally rational in the last 10 years. Mostly they have been rational in most of the years, except the recent one, which gives us confidence that that was a aberration and we will go back to a rational tax policy at least next 2 years. So someone has to buy ITC more from a 1 year perspective rather than a near term. Valuation comfort is high, dividend yield is high, but trigger will take time. So that's why we have to wait out the Q1 week numbers.
And last off, Abneesh, how should one look at paints? How are you looking at the evolving competition? And how are you looking at the erosion in margins as a result of the way crude has moved? What's the risk there? And second, how is market share evolving? Because this is the first full year where, you've got the participation of Birla Opus come in. So give us a sense on how market share, in your opinion, has evolved. And is this the kind of trend now that we can see going forward as well, or will it change?
So we are quite positive on paint stocks. We have Asian Paints and Berger Paints both in our top buys. Yes, FY27 will be a good year for legacy paint companies and even for the new paint company, Birla Opus from Grasim. I think Asian Paints, Berger, Birla Opus all will grow in the 13% plus range. Birla Opus will be a bit faster because they are still expanding distribution. Coming back to market share, my sense is there is a local paint company's market share of 20-25%, and then there are smaller legacy players also. They will have a big challenge of maintaining market share, because whenever such sharp inflation happens, they are not able to manage the working capital. They cut down their advertising. So my sense is legacy paint companies and Birla Opus all can happily coexist. Coming to margins, if I first start with Q4, if you see both Asian and Berger had a multi-year, multi-quarter high EBITDA margin and volume growth. And this is after full impact of the competition. Apart from Birla Opus, JSW has also bought out Axo. Then we have seen Astral Paints and many other paint companies. So after all this, both Asian and Berger have reported multi-quarter, multi-year high volume growth and margins. That shows that paint industry is now back to normalcy. Investors have also started liking the sector after a lull of 2 years, because what will change in FY27? is we will see sales growth being at least 13 to 15% for all the legacy players. I think that's a good number in any consumption. Second is on the EBITDA margin, my sense is most of the companies will be able to maintain their FY26 because, as I said, till $90 to $100 crude oil, already the paint companies and Pidilite, etc., have taken 12-13% price hike. So to a specific question, I think we don't need to worry too much on the EBITDA margin. Yes, as I said, gross margin, there could still be 100-200 bips gross margin compression for paint companies, FMCG companies, because companies don't take price hike on day one. They take it gradually. But how it works is, see, ultimately, geopolitical issue will get resolved. Crude oil will come down because there's more supply of the Russian crude, etc. Now India is talking to Venezuela, etc. So my sense is if you see on a full year basis and even on a H1 basis, I think paint companies will be able to maintain their historical FY26 band of margins and maybe even expand, right? When the crude oil cools off, no paint company will cut price in the immediate term. My sense is 1-2 quarters or lag will be there before they cut. So on a 6-month basis, on a full year basis, clearly I see ability to hold on to margins and maybe even expand. But the more important thing is the revenue growth has come back to double digit. Volume growth is also at a high single digit. And the price value clearly for the first time in 3-4 years, the value growth of sales will be higher than the volume growth. I think that's a re-rating even for the entire paint industry. Birla Opus has taken almost the same kind of price hike which Asian and Berger have taken. So it is also going towards a more rational policy rather than a reckless policy of just discounting, which is a good development for the entire paint industry.
Okay, Abneesh, thank you so much for coming in. I mean, we can go on and on because your coverage is vast and there's just so much that we can speak about. But for the moment, we'll give it a pause. Thanks so much for joining.
Thank you.
All right.